Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. I'm Tall Mike. I'm so glad you're here. I really look forward to Mondays. A lot of people don't like Mondays. I happen to love Mondays. Stock market's back open and I get to talk to all you nice people. All right, so what do we got going on today? Well, we got the markets up again. Dow's up about 200, Nasdaq's up about 100. Now, September can be a very volatile month in both directions, up and down. And this would be another what I would call a short covering rally. You see, right now, there's a lot of people betting that this market is going to go down. And I believe it will eventually, but not yet. Not yet. It looks very strong to me. Look at right now on the SPY, we're sitting at the 410 level. Okay, we were at 430, came down to 390, recovered half of that, sitting at 410. We're probably going to get a little pullback here, but we're still above the 50-day moving average. And that's where the war is going to be fought between the bulls and the bears. Now, the bulls, they're going to try to pull this right up to the 200-day moving average. They want it to bounce off the 50-day. The bears are trying to get this down below the 50-day moving average so that bad things can happen to the marketplace. I think we're going to pull back down to that 50-day moving average, but it looks like it wants to bounce. It looks like it wants to bounce higher. Now, I do think eventually we're going lower. I believe this market still is very frothy. Now, here's an interesting statistic that I read just the other day. Okay, so in 1975, there was 17% of the S&P 500 was in intangible assets. Now, intangible assets would be like intellectual property. They're things you can't really put your finger on. You can't really hold them. You can't really grasp them. But now in 2020, well, 2022 actually is where we're at, but in 2020 and beyond, we've gone to 90% of the S&P 500 is now intangible. It's intangible assets. It's things like intellectual property. You see, now back in the 1970s, we actually used to make stuff. We used to manufacture things. Now, we don't manufacture anything. We push a lot of paper around. A lot of paper gets pushed back and forth. And we're in that digital age where everything's digital. I mean, the Metaverse, well, that's all digital, right? So right now, it just concerns me that 90% of the S&P is in intangible assets and only 10% is actually tangible assets. Now, that is just telling me that there is froth in this market, that this market has a lot of room to go down. Look, if we get a financial depression, that 90% of intangible assets can get completely wiped out. That means we could have a crash in the market of 80 to 90%, and I believe eventually that's what's going to happen. But right now, I think that we're going to see the battle between the bulls and the bears at the 50-day moving average. We'll get a little pullback down to that level. It'll probably bounce higher off of that. There's too many people betting on the short side of the market right now. That's just my take. You could have a completely different take. Let's move over to the real estate market. Now, my take there is a lot different than a lot of people. Right now, we got sellers that are in denial. They're in denial. This market, it's going to bounce back up. They think that the Fed's going to come and lower rates, and we're going to get back to where Billy Bob sold at, get back to the record high prices. They're in denial, but they're also delusional. Let me explain what I'm talking about. Now, I got this one client, he's in Foster City, California, and he thinks that his house is worth, Zillow says it's worth $3.2 million. But of course, his house is nicer than everyone else's house. So he's going to sell it for $4 million, and he's going to sell it himself. Well, eventually he's going to list with an agent. Hopefully he lists with me. But what I'm saying is he's delusional. Look, he's not going to be able to get $3.2 million right now. That is got to come below that. He's got to come down to $3 million, maybe $2.8 million. But he's got this nice sign made up. For sale by owner, $4 million. Now, that's his hope. He's delusional, in my opinion. Now, he can sit there as long as he wants, and with that sign out there, he's going to get every real estate agent calling him with the sales pitch saying, hey, you're never going to sell it yourself. List with me, list with me, list with me. That's what us real estate agents were trained to do, to go after the FSBO. Now, what's interesting, that the FSBOs for sale by owner, now in 2006, the market was really hot. And there was about 13% of the people selling were actually for sale by owners. All right, so we're in a really hot market right now, right? In 2021, it was really a super hot market. Never been hotter. But there was only about half the number of FSBOs as there were in 2006. Only about 7%. Now, this gentleman that's got his house up for sale for $4 million with his nice sign. It's a nice sign for sale by owner, $4 million. He's hoping to get that. Not going to happen. Not going to happen in this market. He'll come down, and eventually he'll list this at 2.8 if the market holds. But I think there's going to be a bloodbath in this market. I think that the blood is going to be flowing. A lot of people don't think that. A lot of people in your area, of course, the market's going to go up. But a lot of areas are in trouble already. Now, people say they're not in trouble because there's no inventory, Mike. Now, I beg to differ on the inventory. Let's talk about, well, this is just in my area. Okay, so San Francisco, I live in the South Bay, but in San Francisco, in February, it was the lows. There was about 2,000 homes listed for sale. Right now, there's over 6,000 homes listed. The inventory has tripled. You go to Las Vegas, Nevada. Back in February, where the lows were hit for inventory, about 3,500 homes were for sale. Right now, over 11,000 homes in Las Vegas. You go to Phoenix, Arizona. Phoenix, you had basically 3,900 homes for sale in February, and now you got over 16,000 homes. Since February, a lot of major cities have tripled their inventory already. But here's the inventory that really scares me. Here's the inventory where I think there's going to be a fire sale. Here's the inventory where the blood's going to start to flow. Okay, the inventory of new homes available for sale right now is approaching 1 year. Meaning if they don't build another house, and we know that they got a lot of houses coming onto the market, they got over 1 million of them coming onto the market, but let's say we forget about those. Right now in unsold inventory of new homes, we have a whole year's supply. Now we see these home builders, well, that's their job. They build homes, right? They're not going to stop building because if they do, they're out of business, really. So they're going to keep building. This inventory just piling up. They can't get the homes sold at these prices. They can't get them sold because interest rates went from 3% to 6%. Now, we got Jerome Powell coming out next week. He's going to raise interest rates another set point, 75 basis points. We'll go from, the 2.25% to 3%. But the mortgage rates, they're going to go from 6% where we're at now to about 7%. Now, as it keeps increasing, they cannot get the homes sold. They have to lower the prices of the homes. They either have to lower the rates, which they can't do. They could buy the rate down. A lot of home builders are starting to buy your rate down. We'll buy it down one point, and that way they don't have to lower the price of the home. Because you see, a lot of people already bought their homes right next door to the ones they're trying to sell. And the ones they're trying to sell, they can't get them sold. So they have to lower the price of these homes. And you see, builders, they're not like the average seller that's delusional, the average seller that's in denial. They're not like that person. They have to get rid of these. They don't have a 30-year mortgage. They have short-term money financing these. And there's a year's supply of them. So something's got to give. And right now, they're already reduced 10, 20% in many areas. These new homes are coming down. Go on, any of their home sites, Lennar, Toll Brothers, you'll see the price reductions in these new homes. They're down already 10 to 20%. And this starts the blood flowing. And once the blood starts flowing, it trickles into other areas, maybe even your area, but it trickles into the homes where the seller's trying to sell. Where Billy Bob got out up here, and my buddy's still trying to get Billy Bob's price because he's delusional. He can't get that price anymore. The price is down $1 million from what he's asking for it. He's got to come down if he wants to sell his house. Now, a lot of people, they're just saying, well, the market's going to go back up, Mike, so I'm going to pull my house off the market. I have a client that's already done that. He's taken his home off the market, waiting for the next real estate boom. He's expecting another real estate boom. Now, that may take a while. It may be another 10 or 20 years before the next real estate boom, and he can get out of the market at that point. That's his hope. That's his hope. He wants to get out of the market, but he doesn't want to take anything less than what his buddy Billy Bob got right down the street. He wants to get that same price, but he's delusional. And this is normal in the market. Now, you go back to the subprime crisis back in 2008, 2009. I had a lot of sellers that, well, they were delusional until I'd go meet with them. And you know, it was really sad. It's really sad because they had just bought their house like a year earlier and it was already dropping 10, 20%. They had lost all their down payment. And this one lady, I felt so sorry for her, you know. When I told her what I could get her home sold for, she just started to cry. I don't know what to do when people start to cry when I'm just telling them the facts. I'm sure like some people that listen to this channel, they start to cry when they hear that there's going to be a bloodbath. A lot of people don't believe it and they're in denial, and that's good because your area, it's not going to go down. Your area is going to be the first area to get the next real estate boom. But I'm telling you, I've seen this movie before. It does not end well. It does not. It does not. Look at a lot of the banks, they're already trying to get out. They're trying, like Wells Fargo, they pulled back their lending. They're not making as many loans. They've laid off 1,000 people from their lending division because they don't want to be the one holding the bag this time. They know what happened in the last subprime crash. They don't want to do that again because they lose a lot of money. And look at a lot of people that bought in the last 2 years. They're going to be very sad people when they realize what happened to their equity, what happened to their down payment. It's a sad time for these people because things are starting to turn. They're starting to go down. The blood's going to start flowing in the street, and they're not going to be able to get out at where they thought they could. No, they can get out down here, but then they still got closing costs. They're not getting out close to Billy Bob's price. Now, it's sad in the market. Maybe the boom's going to come to your area. We'll see. Maybe not. Anyways, I'm Tall Mike. If you like this stuff, give me the thumbs up. Why not? Why not? Punch that subscribe button too. I want to talk to you later in the week because I love this stuff. It's kind of fun, right? Kind of fun talking with you guys. Get out there, everybody. Have a great day. Bye-bye now.